condo sales and rising prices. So, a new condo project just launched, and guess what? It sold over 85% of its units on the first day. The average price? A whopping $2,700 per square foot. And my first reaction was, wait, how are people affording this? Where is all this money coming from? If you're not familiar with this pricing, let's break it down. A two-bedroom unit, around 700 square feet, would cost you about $1.89 million. To put things into perspective, with that money, you could buy almost 3 four-bedroom HDB flats, each priced at around $600,000, and still have enough left to buy a car in cash and go on a luxury vacation. But this isn't the only development flying off the shelves. Other projects like Green Heights and Ocean Bay have seen nearly full sellouts at launch. HDB prices on the rise. Meanwhile, HDB resale prices continue their upward trend. Just recently, an HDB unit in Toa sold for a record-breaking $1.6 million. Not long ago, a $1 million HDB was rare. Now, it's becoming more and more common. So, what's fueling this demand? Are Singapore property prices going to keep rising forever? Let's dive in. Why are HDB prices increasing? Let's start with HDB prices. Since 2020, resale prices have surged. In 2024 alone, prices jumped 9.5%, nearly double the increase from 2023. This marks the 19th consecutive quarter of price growth, one of the longest streaks in history. And I know what you're thinking. But income levels are only rising by 5.5%. Doesn't this make housing unaffordable? Well, it does raise concerns. But the reality is, demand continues to outpace supply. Supply constraints driving prices up. Now, back to why prices are climbing. First, on the supply side, fewer new HDB flats were launched in 2024 compared to previous years. This will remain tight until 2026, when more flats are expected to be released. Additionally, fewer flats reached their minimum occupation period (MOP) in 2024, meaning fewer units entered the resale market. Analysts predict resale HDB prices will continue rising by 3.5% to 8% this year, though slightly slower than last year's pace. Private property market trends. Now, let's talk about private property. In 2024, private property prices grew by 4%, lower than the 6.8% increase in 2023. But for 2025, growth is expected to pick up again, estimated between 4% to 7%. Are foreign buyers driving prices? And no, it's not just because of foreigners buying up all the property. In fact, foreign purchases have dropped significantly. With the government imposing a 60% additional buyer's stamp duty (ABSD) on foreigners, their purchases of condos have plummeted by over 70%. The real reason prices are rising? A combination of increased new launches and a tight supply of homes. In 2025, over 11,000 new private units and 2,000 executive condominiums will be launched, but demand still remains strong. More Singaporeans are choosing condos over HDBs now. Back in the 1990s, less than 10% of households lived in private condos. Today, that number has jumped to almost 17%. Young adults buying more condos. And here's an interesting fact. Young adults in their late 20s and early 30s are increasingly buying condos. But did their incomes rise significantly? Not exactly. Between 2016 and 2022, salaries for 25-29-year-olds grew by about 17%, while those aged 30-34 saw a 16% increase. But during the same period, private property prices rose by 30%. So how are they affording condos? Well, some are saving aggressively, some are stretching their finances, and others are getting help from their parents. A survey found that nearly 80% of young Singaporeans aspire to own a private home, mainly for capital appreciation and rental income. How much can you earn from a condo investment? So how much can you really make from buying a condo? Some new launches have seen buyers making 30% gains in just 3 years. For example, at The View, two-bedroom units have gained around $400,000 in value since launch. But not every condo guarantees profit. In fact, some high-end projects launched in 2007, like Sky Heights, were selling at over $3,000 PSF back then. Even after the 2020 boom, many owners had to sell at a loss. Some losses exceeded $2 million per unit, the risk of overpaying for condos. The key takeaway? If you buy at an inflated price, you might still lose money even after holding the property for over a decade. Fear of missing out. FOMO. Another reason people are rushing to buy condos? FOMO. People believe that the longer they wait, the harder it will be to afford one. And they might not be wrong. The price gap between HDBs and condos has been widening over the years, making upgrading more difficult. Executive condominiums, ECs, as an alternative. For those who can't afford condos, executive condominiums, ECs, are a popular alternative. But ECs come with their own challenges. With the $16,000 income ceiling, the maximum loan you can get is around $900,000. To buy a unit at the newly launched Seaview EC, which costs $1.35 million, you'd need a down payment of around $400,000 up front. Not exactly cheap. Are we in a property bubble? So, are we in a property bubble? One way to assess this is by comparing property prices to income levels and rental prices. Between 2019 and 2024, property prices increased by 38%, while median household incomes only grew by 14%. However, the rental market has also surged, with rental prices rising by over 50% in the same period. This suggests strong rental demand, which helps support property prices. Will the government intervene? Of course. If prices spiral out of control, the government will step in with cooling measures. Final thoughts. So, will property prices continue to rise? In the long run, probably. But choosing the right property and entry price is key. Some projects will give great returns, while others may lead to losses. That's all for this update. If you found this helpful, don't forget to like, share, and subscribe. See you in the next one.